And welcome to Chapter 7, Calculating Pay and Recording Payroll Taxes, the beginning of the payroll process. Okay, payroll. Did I skip a slide or why am I not? Oh, I guess I don't have anything about learning objective 1. So this is the first learning objective. Payroll is a typical business event. I do payroll at my company. I've never done it as an accountant. In my 25 plus years as an accounting person, I never did payroll until this particular job. I've always been at companies that had payroll departments or payroll persons. When I started at this job, we only had like 3 employees. So I did the payroll through ADP. So they do most of the heavy lifting, and that system does a lot of the heavy lifting, and a lot of companies use ADP or some other software company just because it's easier and they know all the tax laws and everything like that. So payroll is something, every company has to do. It's kind of scary doing the payroll because it's so important that it's always right and it's always done on time. Otherwise, you're going to catch hell for it. Okay? So payroll is the same whether it's a business as small or a major department store. A business needs to know how to calculate, pay, and record, how to report payroll and payroll taxes. Federal, state, and maybe even local laws regulate the payroll process. Okay, this chart just kind of takes you through the process. First, you have to calculate gross earnings, employee withholding tax, net pay. Like I said, ADP, you put in the gross earnings once, or what the monthly gross earnings or the per paycheck gross earnings is, and they'll do all the other heavy lifting. You have to prepare paychecks, prepare a payroll register, update employee earnings records. So this is all so manual in this chapter compared to what ADP can do for you. But again, you have to learn what ADP is doing and make sure everything is being done correctly. So then you calculate and pay employee payroll. Quarterly you have to file these 941 reports, and you also have to do W-2s, W-3s for the year-end taxes. Okay, you record the payroll tax, payment of payroll and payroll taxes in the general journal. You post it to the accounts in the ledger, and then you report the payroll and payroll taxes and prepare the financial statements. So that's kind of, in a nutshell, the process. The accounting cycle for the payroll process, let's say. Okay, like I said, it must be accurate. It's so important. It must be on time. And you must obey the law. And the data must be kept confidential. So it's got to be with a highly trusted person. You don't want pay information getting out or printing it somewhere. So that's, kind of the reasons why it's such a stressful job to do payroll. Okay, you have employees that are hourly, paid only for hours worked, and some that are salaried, paid a fixed dollar amount. The pay period can start on any day of the week and must end after a specific period of time. Now, my company, we pay on the 15th of the month and the last day of the month. You can pay daily, weekly, bi-weekly, semi-monthly, monthly, quarterly, annually. Most people pay you twice a month. You can use different pay periods for different groups of people, like hourly might get paid every 2 weeks, and salaried are on the 15th and the last day of the month. Okay, so here, now we're finally at the learning objective 7.1, which is calculating the gross pay, employee payroll tax deductions for federal income tax withholding, state income tax withholding, FICA, OASDI, Medicare, and net pay. Okay, the regular earnings for an employee for the pay period, overtime earnings must be computed according to the law, state and federal. The Fair Labor Standards Act, the federal law governs overtime earnings. applies to employees involved in interstate commerce. Pay at least 1.5 times regular rate over 40 hours in one work week. Work week is a 7-day or 168-hour period that can start at any time. Example for a biweekly pay period. Week 1, 44 hours worked. Week 2, 38 hours worked. So week 1, we had 4 hours of overtime. Week 2, we just had regular time of 38 hours. But still, when you look for biweekly pay period, you're still, when you're looking at those 2 weeks, you still only have 4 hours of overtime because you look at it on a weekly basis. So to calculate gross earnings, you take the pay rate times the number of hours worked with the 4 overtime hours. So the regular rate times 1.5 is your overtime rate. So we got 78 regular hours at the regular rate and 4 hours of overtime at the 17.10 overtime rate. So your regular earnings plus your overtime earnings equals your gross earnings of $957.60. Or if you want to look at it a little differently, there were 82 hours total at the regular rate, 4 overtime hours. So the extra pay is 0.5. So the $5.70 per overtime hour. So you come out to $957.60. So just 2 different ways to calculate the exact same thing, just whichever way you prefer to figure it out. Federal income tax withholding, we all know we have it. We all know we hate it. Several different taxes are taken out of employees' gross pay. The W-4, the employee's withholding allowance certificate, is used to determine the amount of taxes withheld. It lists marital status and the total number of allowances claimed. So each employee needs to fill out a W-4 so that the payroll person knows how much taxes to take out and how much they want taken out of their paycheck. Okay, so you put in your information, your social security number, so important. If you're married, single, etc. Your number of allowances. If you tend to pay a lot of money at the end of the year, when you figure out your taxes, sometimes you might want additional taxes withheld. Usually if you're married or you have a second job. Now this form is old. There's a new form that came out in 2020, which is a little different, but it's close to the same. But it's important the employee signs it and dates it, and it's given to the employer so that they know how much taxes to take out. This, they have to put in if you're single, and the number of allowances are important. Okay, so the withholding amount is determined by marital status, the number of claimed allowances, the gross pay, and the pay period length. So wage bracket tables are found in the Circular E Employer's Tax Guide, which I think is on the next page here. So a little link here, or a little excerpt, we can see, based on the number of allowances, and we had 1, and if the wages are, I forgot what the wages were here. So the wages were, so you look at your wages and you look at your number of exemptions to find out how much withholding allowance you need to withhold. Okay, so here's for single persons, there's a different table. Did it say what this one? This one was for single person with biweekly pay period. And here's another one with single person biweekly and just continuing with the wages. Okay, states charge their residents an income tax on money they earn. So there's also, besides federal tax withholding, there's also state income tax withholding. Some states have no income tax. We are not fortunate to live in one of those states, although they have taxes otherwhere. And states have similar tables as the federal one we just saw. Okay, and then there's other income tax withholding. Many cities and counties tax employees' earnings. It may be a percentage of gross earnings, much like the federal income tax. It may be a fixed dollar amount. They have their own rules regarding payroll tax deposits and tax reports. Okay, for Social Security taxes, it's a tax in addition to federal and state taxes. A 1935 federal law called the Federal Insurance Contribution Act became effective in 1937. Employers are required to withhold amounts from employees' pay. Used to make the following payments. So monthly retirement benefits for persons over 62 years old, medical benefits for persons over 65, benefits for persons who have become disabled, benefits for families of deceased workers who are covered by this law. The tax is really two taxes: old age, survivors, disability insurance, and Medicare. Each tax is calculated different, and OASDI puts a limit on the amount of tax an employee must pay. With Medicare, all wages earned are subject to Medicare tax. Okay, so here are the wage limits as of 2017. Actually, the 6.2 and 1.5 is the same. This Social Security amount limit is actually, I think for 2021 is going to be close to 138,000, and it was like 2020 was like 130. So people can only get taxed, or the employer only has to pay up to like 138,000 a tax in here. Okay, so there have been a few changes since 2017. Our book's a little outdated. Okay, other withholdings, medical insurance. If the employee has medical insurance through the employer, there's going to be a deduction for that, which would include maybe life insurance and dental insurance. Maybe a savings plan, like a college savings plan. Maybe disability insurance. Union dues or charitable contributions could be other potential withholdings employees could have. So there's a lot to consider in doing a paycheck. Now, I'll tell you, I have it set up in ADP, and it's actually pretty simple, and every 2 weeks, I press a button and it's pretty much done. But there are changes from time to time, like in deductions and what they want taken out of their 401k plan or simple IRA. Sometimes you get refunds on insurance, so there are from time to time some differences taken into account. And this does not even consider bonuses that are paid, which are even more stressful to make sure you got the right amount of tax and those are paid correctly. Okay, so net pay. You got your gross earnings. You've got all your deductions and taxes here, and your total deductions to get what your net pay. So you take your gross minus your total deductions to calculate your net pay. So hopefully everybody kind of knows what that looks like and used to seeing that on your paycheck. Okay, so that includes Learning Objective 1 for Chapter 7. See you in the next Learning Objective.